Let's see, I am preparing cash account. Can anyone just read out this journal entry? Which account is in the debit side and which account is in the credit side? Just read the entry which is being highlighted. This is the entry. Just read the entry available on your screen. What is written there? No one? Sister, just read the screen, the highlighted section.
Okay, so, okay, ma. Cash account to debit. Debit.
Capital. Now, okay, you may mute yourself, Sylvester.
Okay.
Now you see how we can prepare the ledger. This is the format for ledger. All right, at the top, you need to mention the name of the account that you are going to prepare. And your entire ledger is divided into two sections. So this left-hand section is the debit section. Let me remove few things. So the left-hand section, which is right now highlighted, is the debit section, which comprises of 4 columns. And then you can see another 4 columns, which is the credit section. All right. And again, the matching concept will be here. At the end of the day, you need to match the total of debit and credit side. So how to prepare the ledger? Let's learn one ledger, how to prepare. So here I can say this is my first entry, cash account debit to capital account. As we are preparing the cash account, we will see the counter section or the opposite section of cash account. So in the opposite of section of the cash account, we can see it is written to capital account. So we need to write in the ledger to capital account and the amount is 5,000. So how to enter? All the two entries will be in the left side. So to capital account. All right, date I have already typed here just to save the time. And this is 5,000. So cash account I am not going to write. Cash is already mentioned. I will see the opposite section of cash account in the transaction and we are going to write it. So the first entry is to capital account. Let's refer the second entry where the cash is mentioned. The first one is done. Now in the second entry, you can see this is bank account debit to cash account. Now cash is appearing in the credit side. So I don't need to see the cash account. I need to see the opposite section, which is the bank account. Here the bank account is falling in the debit side and the amount is 500. So for me, all the debit entries will be written vice versa. So here I will write by bank account in the vice versa side and the amount is 500. This is the second entry. So cash we are not going to write. We will see the opposite section of cash. What is mentioned there? If it is to, then it will be in the left side. If it is a debit, that is going to appear in the vice side. And then just like that, we will enter all the transaction where the cash is mentioned. Now see the third one. The third entry says furniture account debit to cash account. Now 2 is again appearing in the credit side. So I am not going to look at cash account. I am going to see the opposite section which says buy furniture account. So I am going to write buy furniture rupees 200 in the date of 3rd April. All right. So I am writing here buy furniture account. Alright. And I need to mention the 100 rupees. Okay. So I am writing here entries which are related the opposite section is purchase by. So by purchases account 400. So again I am writing here by purchases account page all the entries which is account we can see cash account debit to sales account. Now sales account and 600 rupee and the account is done. Now the seventh one, here again there is no mention of cash, so we don't need to enter anything while preparing the cash account. We will refer the next one, that is cash account debit to Ramesh account. Again we can mention to Ramesh account 300. To Ramesh account and the rupee is 300. So that is how we can prepare the accounts. I think one more entry is left, that is rent account debit, salary account debit to cash account. Means cash is falling in the two sides, so we need to refer the buy side 200 by rent account, that is 100 by salaries account another 200, and both the dates are similar, so I am copying the date here and it is done. Now all my entries related to cash are over. Once all the entries related to cash are over, we need to close the accounts book. Now here you can see it is just a dummy question. So in the dummy question, you can see all the transactions are related to the month of April. But actually, when you see the practical question, you will find across the months the transactions took place. And when we can close the accounts, we can close it at the end of the financial year. All right. Now here we can see few amounts 5,600 and 300. Here also we can see few amounts 500, 200, 400, 100 and 200. Now let me know in which side the amount is maximum. In the left hand side debit side or in the right hand side credit side. Total the amount of both the sides and let me know which side we can see the more very good. So 5,900 is more. So I am writing the total in both the sides the similar. Why? Because I need to make it equal. How shall I make it equal? By writing how much is the balance at the end of the year. 31st March 2022. These all transactions are from 2021, so definitely the account is going to be closed in 31st March 2022. This is the last year. Now I need to see how much is the balance. All right. Now the balance. Please mute yourself. So I am calculator 5,900 and I all the amount of credit side 500 minus 200 minus 400 minus see 1,500 is the balance. All right. Now you look at the entire thing. This debit section explains from where the money is coming in the business to the capital by selling out the goods, and Ramesh has paid 300. So the left hand section is the section where I am writing all the money. And in the right hand section, we have mentioned all the amount which is being paid or being spent by the person or by the organization. So income versus expenditure, and we can say income is more, 5,900, and expenditure is less. So this 4,000 is the amount cash account. How to mention this leftover amount? By balance C T. The amount is 500 after all the to the next financial transactions. So while we are starting the next financial year, this is balance account or balance amount which will be available with the organization. I am writing here balance B or stand borrowed down. Of the ledgers, now my stand is clear that I have received money from capital, from sales, and from damage, and 500 in the bank. I have purchased furniture. I spent in purchasing goods. 900 certain amount has gone, and I have a balance amount of 4,500 still me. And this is the closing balance of the previous year, and therefore this is the opening balance of next year. So right now at present, standing on 1st April 2022, this is the cash available in cash box. And this is how we need to prepare all the ledger to put the balance available in that particular account. Now let me know if you have any question at this point. I am going to show you one more ledger for your practice. But right now, if you have any question, please ask. You can unmute yourself and you can ask. It is very clear. Okay, anyone else? Any doubt? I am going to show you one more account. All right, then the rest you can practice on your own. So I am going to show you the next account, this capital account. And if you go through all the entries, capital account is mentioned. 9 entries, there is no mention of capital account. So it is very easy and small ledger because it is having one entry, cash account debit to capital account. account is appearing in the credit side, so we need to see what is falling in the debit side. In the debit side, we can see by account rupees 5,000. So again, we will draw the format the same way, and here we will mention by cash account 5,000 rupees. Now there is no more entry. So this side is going to be more 5,000 because in the left side there is zero, no balance. That's my balance is going to be 5,000. The entire capital is right now in my hand. I have not spent anything for appears in the vice versa side. See here. This is the closing balance. So if the closing balance is appearing in the right side, the opening balance will appear in the left side. All right. So it's a vice versa. So closing in the right means opening in the closing in the left means opening in the right. Or you can say closing is in the credit in the debit side. If the closing is in the debit side, then the opening is going to be in the credit side. So vice versa. So here I can see the closing balance is appearing in the left side. So the opening balance is going to appear in the right side. So this is going to be the date 1st April 2022 and to balance BD. As I said, BD refers to borrowed down. Amount is 5,000. So in the cash account, I 500 is left. In the capital account, I get is left. And that is how we should prepare all the ledgers which names are available in your accounts within the journal book. I have prepared the rest of entries here. All right, just to save the time. So everywhere we can see 2, 3 entries, and we have put the balances. So closing balance in the right means opening balances in the left side. So that is we need to prepare all 10 accounts which we have mentioned. Now, if ledger is clear, I will move forward. Ledger is clear to everyone. Can you practice on your own?
Yes, ma'am, we can practice.
All right. So you can refer your study material and easier to you when you do it yourself. So after writing ledgers, you could see that we have all the balances with us. In cash, we have 4,500 rupees. In capital, we have 5,000 rupees. In bank, we have 500 rupees. Then furniture, we have furniture of 200 rupees with us. We have purchased total goods of 1,400. Ram Narayan. So Ram Narayan is debtor or creditor, I forget, but okay. We have purchased goods from Ram Narayan. That means we need to pay 1,000 rupees to Ram Narayan. Ramesh has paid our 300 rupees, and Ramesh's book is become closed. Now sales, we have sold goods for 900, and rent, we have paid 100 rupees as rent, and we have paid 200 rupees as salary. So by looking at the closing balance or opening balance, we now are very clear that this now the next step is trial balance. All right, this is the name, trial balance. Now, why we prepare this trial balance? As the name suggested, we try. That is why trial. What we try? We try to see whether debit and credit is balanced or not. We try to see whatever the entries we made book, and we have posted the entries in the ledger book, we have posted it correctly or not. So trial balance is the method for you to see whether are correct. And you will prepare the trial balance at the end of the right. You prepare the trial balance at the end of the financial year. So here the End of the financial year is 31st March. Sorry, the year I have mentioned is incorrect. It is 31st March 2021. So in the last date of the financial year, you can close all the books, prepare the ledgers, and when you prepare the trial balance, it is for yourself to be confident that whatever you have done till the date, how would you see? How would you see? The first thing you should write the format the way I have written particulars. In the particulars section, you mention all the names of the ledger that you have prepared. All right, you mention all the ledgers that you have prepared till the date, and then there will be again the section amount and credit amount. Now, what you need to do, you need to look at all the opening balances and you need to note that in the trial balance, starting with cash account. Now, I am again referring my cash account. Look at the cash account. And I can see 1st April 2022, the cash account is showing the balance 4,500 in the debit side. See, this is debit amount. We should always refer the opening balance of next year. So in the next year, it is showing the debit balance because it is in the debit section. You can refer it. This is the debit section. 100 rupees balance in the cash account. Right amount, which is so where is my trial balance? Is at the end. So cash account and debit balance. Just note down all the opening balances by pages. The next, which is the capital account. Now look at the capital account. Balance is appearing in the credit side, 5,000 rupees. All right, again I am going down and I am writing 5,000 rupees in the credit side. Have bank accounts. Let's refer. Where is it? Yeah. Bank account is having 500 rupees in the debit. Furniture account is having 200 in the debit. So 500, 200 and 1400. Let's write all the amount together. 500, 200 and 1400. Now Ram Narayan's account. Let's see what is the balance for Ram Narayan's account. His account debit is 1,000 balance. In the credit section. So here I am writing 1,000 rupees in the credit section. Then Ramesh's account, there is no balance because Ramesh has already paid. So no need to mention if there is no closing or opening balance. So here we can see there is no opening or closing. There to Ram and Ramesh has paid 300. So accounts are closed. Debit, credit are equal. Balances are left. So nothing to write in Ramesh's account. But sales, we can see the credit balance of 900. So we'll mention sales here, sale, 900. Is it 900? Sales, yeah. Sales is 900. Then we have rent, debit balance 100, salary 200. So rent is 100, salary is 200, and nothing else is we have already mentioned. So after jotting down all the opening balances and all the debit section balances in one place and credit section balances in another place, you should sum up the total of both the sides. And now, if your accounts are correct, you don't need to put any effort to make the total equal. It will be automatically equal. All right. So we can have a check whether the totals are equal or not. We have prepared right account or not. So I'm making the total debit side 500 plus 500 plus 100 plus 1400 plus plus 200. And then I will make the total again for the next side. So I'm again taking the calculator. So 5,000. So you can see the total in both the sides are equal, and it will be equal if you are correct. If it is incorrect, mismatch are or where the missing data are the format of the preparation of trial balance. And no, if you have any question, I hope it is clear to everybody. Question point question. Come on, young people, just respond me once. I must know whether you understand or not.
Yes, ma, we are getting it.
You are getting it. Thank you so much for responding. I'm expecting everybody to respond when asked. Otherwise, whether you are clear about the accounts or not. All right. So
It is clear. It is clear, ma. We are getting.
okay, good.
The reason why we usually keep quiet, ma, is because we are used to our counselors usually talk. We don't usually have to respond. That is why we are understanding.
You are understanding. All right. Thank you. Now then, let's begin with the next part. So this is and this is for our assurance that whatever we have done till today, once this trial balance is made, we need to prepare. This is the next step, which is final account. So after preparation of trial balance, actually we need to prepare the balance sheet. And this balance sheet is a public which speaks about your financial status. And preparation of balance sheet, there are three steps. So this preparation of balance sheet is divided into three steps. I would like to refer here the PPT. So this is the PPT related finance final accounts. The first part is going to trading account. So after trial balance, the first thing that you are going to prepare is the trading account. Now, what is let's very simple. Trading account means all the transactions which is direct in nature. Here, direct means that all the transactions which are related or the business without which the business will not be continued. Those expenditure and income we will put under trading account. So trading account is the records of all direct incomes and direct expenditures. Let's understand it in a way That let's say my business is all about the preparation of, let's say I am having a manufacturing unit which prepares pen and pencils. All right. Now, if that is my business, I need to spend on material. I need to buy material to make pen and pencil. I need to prepare the. I need to meet the expenses related to manpower or labor who are directly associated with the manufacturing. I need to pay the electricity bill or the bill related to water, repair, maintenance. These all are the direct expenditure. You cannot forego any expenditure and you cannot continue by foregoing either of the expenditures. So trading account means all the expenditures which are direct in nature. Similarly, the income which you gain by doing the business. All right, means by selling the product or by giving your consultancy services or by providing the services to the customers. Okay, so the direct income and direct expenditure here we introduce in the trading account. Now, this is the format of trading account. Just go through the items. All right, in the here you can note down all the expenditures in the left side of trading account and all the income on the right side of the trading account. Someone is unmuted. Kindly mute yourself. May I request the participants to mute yourself. All. So now, if you see this particular format, you will find this is the format for trading account. So you can see the heading at the top. You need to write the name of the business or the company. Then you need to mention trading account, and at the end of the line, you need to mention for which financial year you are preparing the trading account. Now, in the left hand side, what are the entries you have made? You have written the opening stock. These all are left hand side is for all the expenditures. So opening stock means actually the opening stock of raw material. That means you have purchased the raw material which is left, means which is still unused is your opening stock. Then you mention purchases. Your purchases means purchase of raw material. You here we are adding omission means which purchases are not yet registered. You can minus if you are returning any of the purchase. And similarly, you can go through all the expenditures like cartage, freight, railway charges, octroi duty. Octroi duty is a kind of manufacturing duty, import duty, cleaning charges, dock charges, custom duty, gas, water, fuel, coke, factory electricity, wages. So you can see all the expenditures which are needed for manufacturing is a part of trading account. You should not remember, you should not at all write any expenditure here which is not related to manufacturing. That means if you are sitting in an office and that rented office, you need not to mention the rent of the office here because without giving the rent, still you can continue your manufacturing. So your office expenses are excluded in trading account. Only the expenditure related to shop floor or the manufacturing unit will be jotted down here in the left hand side. Similarly, in the right hand side, you can see all income are being shown, like the sales, like sales return, like goods sold on sales return, and gross loss. And right side is income. We can go through with all example. I will take this example later. Let's just go through the profit and loss account. So this profit and loss account, here the opposite side is income. will note down all the incomes and expenditures which are related to office, or which are the outside expenses, or which is profit and loss account. So if you go through the example of profit and loss account, you need to identify the expenses which which out of these would be the profit and loss account, like let's say utilities can be office expenses part of loss account, bank donation can be a part of profit and loss account. For more clarity, I would like to show you a format of if sometime we check somewhere. Yes. So look at how trading and PL accounts are being in the books. First, we need to then to get the balance. Once you get the balance, it will be in form of profit or loss. So if it is profit, you mention gross profit. If it is a loss, you need to mention it as gross loss. And then the same loss is being carried forward, and then you can mention all the items of loss account. So look at these items. These are the items of profit and loss account. So the salary, telephone bill, audit fees, legal charges, electricity charges. Here, electricity charges means electricity charges for office. Maintenance expenses, repair and renewal, depreciation, salary. Entire part is a part which is not concerned with manufacturing. So it is a part of profit and loss account. Similarly, the right hand side is just for the income side, where the income is not from the business, rather from other sources. Just like income by getting discount, income by getting commission, income by getting bank interest on the amount which is saved or deposited in the bank, rent receipt, bad debt recovers. So these all are the income which is not directly linked with the business that we mentioned in the profit and loss account. So by this statement, just you need to understand that out of the entries in the trial balance, you need to identify all the heads or all the names of the accounts which are directly linked to the manufacturer will be posted in the trading, and which are not directly linked with the manufacturing will be posted in the profit and loss account. Am I clear with this statement? Because you need to identify, then only you can prepare trading and profit and loss account. Let's right now unmute. I am going to ask you few questions, few examples. Try to understand whether it is a part of trading or profit and loss account. All right. I am giving you an example. You can unmute yourself and try to answer. Remember, if that particular account is linked with manufacturing or the business directly, then it is a part of trading. If it is not linked with manufacturing, rather linked with office expenses or income, it is a part of profit and loss, PL. All right. So you need to answer whether whichever the account I am mentioning, it's a part of trading or PL. Starting with, let's say, purchase of raw material, trading or PL. Please unmute yourself. Right now, everybody can unmute. You can frequently answer. Purchase of raw material is a part of trading account or PL account. Please answer. Reply. Try to reply. Whether you'll be correct or not correct, I am here to make you correct. All right.
Sorry, ma. Please come again, ma.
Yeah, I am asking that purchase of raw material. This account will be a part of trading or PL, profit and loss. Are you getting my question?
It is credit, ma.
It is trading. Very good. It is trading because without raw material, you cannot manufacture goods. Okay. Now the second question is salary of office staff. It's a part of trading or profit and loss.
Profit.
Profit and loss. Yes. The third question is transportation cost, trading or PL. Transportation cost. Transportation for sending the goods to the market for selling.
Yeah, it's trading, ma.
It's not trading because goods are already manufactured, right? Then we are sending it for selling. So it is profit and loss. What I said, that if it is for the purpose of manufacturing, then trading, otherwise profit and loss. Okay? So remember it.
Okay, ma. Yes,
Electricity,
ma.
electricity bill for manufacturing purpose. Trading or PL. Electricity bill for manufacturing purpose.
It should be. It will be the same as manufacturing as transportation cost.
Yeah. So
So
it's a
it
part
is.
of
So it is part of PL.
no, for manufacturing. That means without electricity, you cannot prepare that goods.
Yes.
It is needed for the running of the machinery. Then it is a
Yes.
part of trading. Trading. Okay?
Trading.
Trading. Right.
Oh.
It's trading, ma.
Yes, it's trading. Now let's take an example. What will be where we can post advertising cost?
Advertising. Advertising cannot stop us from manufacturing.
Yes.
So it is. It will fall under PL.
Yes, it will fall under PL. Very good. Now let's say commission. Commission on sales.
Come again, ma.
Commission on sales.
Commission is also PL.
Yeah, very good. Very good. Now let's take an example wages. Do you understand what wages is?
No, ma.
It's labor cost. It's labor cost. Wages means labor cost.
Labor. Okay, labor cost.
Labor cost. Yes.
Labor cost is trading.
Yes, it is trading because without labor, anyway, you cannot manage manufacturing process.
Yes,
Now
yes.
I hope you are more clear with trading and PL. Now with a small exercise, we will see how the trading account to be prepared. All right. Now you all can mute yourself. Can you see the screen?
Yes, ma. We can see it.
Yes, we can see.
Yeah. So this is the question. I have taken it from book and I have already marked it for the for the convenience. See the first is stock, opening stock. So opening stock, when this term is being used, this is opening stock of raw material. So as we know that raw material is used for the purpose of manufacturing, it's a part of trading. That's why I have written here T. T refers to trading. Then the second is wages and salaries. So as I said, wages means labor cost and salaries means salary of the office staff. But as here both are together, we will consider the first word. And the first word is wages. So we will consider the entire amount is for wages. So it is a labor cost. So it's a part of trading. Commission on purchases. Now here we think that commission we have received on the purchase of raw material. Again, as it is raw material, that means it is related to manufacturing. That is why it is in trading. Freight. Freight is used in the trading account because it is in the manufacturing process. So freight means carrying goods from one place to another place through crane or through some other services in the soft floor. So it is again a cost which is associated with manufacturing. Now here we can say, see, purchases less returns. That means whichever the raw material has been purchased, out of that something has been returned by the organization. So as purchases is in the trading account, purchase return is going to be zero. This is the income which you are receiving by selling the goods which is being manufactured. So as it is again related to the income of manufacturing, it is a part of trading. I have mentioned it with T. So you can see this 1, 2, 3, 4, 5, and 6. These all 6 items are from trading account. Now, rest all are the expenses which are in PL because which is not related, which is it is not directly linked with the trading account. Just like the trade expenses means the business expenses, the rent. Now you don't know what kind of rent. It's a rent of manufacturing unit or rent of office. So I am assuming it as rent of office. You can put it in trading also, whatever is your assumption, because the question is not clear. The horse expenses means the traveling expenses. It's a part of profit and loss. Repair of plant, again a part of profit and loss. Purchase again is a part of profit and loss. And closing stock, as closing stock means like the opening stock and closing stock. This both refers to the opening and closing stock of raw material. So we have taken it in trading. So you can see the first thing you need to do, you need to identify the trial balance. All right, but not in a format which I have taught you. They have not divided and debit and credit, but this is the balance. So the trial balance, you need to identify the items which will fall in profit. You need to identify items which will fall in profit and loss. Once you identify, then you can prepare trading the way I have done it here. So you can see at the heading, you need to write trading and profit and loss account ending. And here you need to mention the date. In this question, there is no date, so I could not mention. But in the real world, you will definitely get the date. Now you always start opening stock. From opening stock, you should start always if it is available. So this is opening stock of raw material, then spending on wages, commission, freight, and purchase returns. We have already marked, we have copied all the expenditures in the left. We have copied all the incomes on the right hand side. Like we have generated income by selling the, and we have some closing stocks still in our hand which we will sell out and we can generate cash. So we have the goods, remaining goods as closing stock. So this is the part of trading account. This is the first part. We prepare together the trading and profit and loss account. So this is the first part. From here to here, this is the first part. This is the first part, the highlighted one. Sorry, I am highlighting it in a all right. So this is a part of my trading account, which is marked with yellow. So this section is my trading account, and this shows that all the left hand side entries are related to manufacturing expenses, right hand side entries are related to manufacturing income, and then we have a balance. So here again we can see the right hand side, the total is maximum 24,900. I can show it with a calculator also. 24,900 plus 3,500 is equals to 28,400. This is the maximum total. So we have mentioned it in both the sides. Both the sides we have written 24,800. And once we have written 24,800 in both the sides, the next work that we need to do, we need to see how much balance is left in the debit side. So 28,400 minus all the amounts which is written in the left hand side. 28,400 minus 9,600 minus 3,200 minus 200 minus 300 850, and we can see 3,250 in the debit side is less. So that means this is the amount we left, and this is my gross profit. So after concluding trading account, whether we will receive gross profit or gross loss. If my expenditure is less and my income is more, I am going to get my balance in because my income is more. If just a vice versa, my expenditure is more and my income is less, then I am going to get gross loss and the balance will appear in the right side, in the credit side. In this case, I could see after concluding the trading account, I have received a profit of 3,250. Now, this 3,250 is the profit only after right to manufacturing, but it is not the end of the business. After manufacturing, there are so many other incomes and expenditures which are associated with the business. So, in the continuation of trading account, an accountant need to prepare the profit and loss account too. Profit and loss account, what we need to take out, we need to take out and incomes which are not linked with the manufacturing, rather which is linked with the office or maybe with offices. So again, the balance is vice versa. So here you can see I have written the gross profit which I have received in the trading account. So in the left hand side, the closing balance. So this section is PL. I have already written here the title. So again here you don't need to write the title. So you have received the gross profit, and again you need to note down all the expenditures. Now these expenditures are related to office or the business, but it is not related to manufacturing, like trade expenses, like any expenses for doing the business is known as trade expenses. Rent, as it is not clear, I am assuming that it's a rent of office. Horse expenses is traveling expense, and is not directly linked to the manufacture. Plant repair is a routine work in the business, and income tax again is a part of office. Similarly, in the income side, we can identify discount on purchase. So it's a kind of income, it's not directly linked to the manufacturing. However, I have received discounts, so it's a kind of income, but it's not an income doing business. So it is a part of profit and loss. And then ultimately, again, you need to balance. And this time you will receive your overall profit for the business. So you can see again the right hand side is more. 3,550 plus 400. So this is more, 3,650. Now from 3,650, we need to deduct all our expenditures. So minus 20, minus 200, minus 500, minus 160, minus 550. And finally, we can find that 2,220 amount is still left. So income is more and expenditure is less again. So the balance is appearing in the left side, and this balance is known as net profit. Now this net profit is the actual profit of the business after considering all the transactions. Okay, so after preparation of these many accounts only, you can prepare balance sheet. So remember how many steps we have learned till the date, till the time. First, journal entries, then expenses, then trial balance, then trading account, and now profit and loss account. After doing this many of accounts, you will be able to know what is your profit of the business in a particular financial year. This is the outlook of trading and profit and loss account. We cannot use color, it is just for understanding. So refer the format. And here I am taking 2 minutes time. You may ask if you have any question in your mind. May I take out your queries? If you have any queries, let me know.
Yes, ma. I have a query. I don't know. My question is just about attendance. I think I have not heard of you taking our attendance. So is it relevant or not? Thank you. Yes, ma.
So are you asking whether the attendance is mandatory or not?
Yes, ma.
That I think your center can let you know. I have no idea whether attendance is mandatory or not. These sessions are given to you so that whatever the queries you do have after self study, you may ask. But I know most of you are from science background, so maybe while reading the books, you may not be able to understand what is written there without clearing the basic concepts. That's why I'm trying to teach you the basic concepts so that once you understand what this trading account is all about or PL is all about, while you're going through the book, you will be better understand the content and it will help during your examination. So that way, I mandatory or not, but it is definitely going to help you. The questions are definitely going to help. About the rules, ideally, I am not rather the is maybe as they will know.
Okay, ma. Thank you very much.
Any question related?
I think we are going to sit down and look over it again. If we have any much concern, maybe in our next class we'll raise the concern.
Sure,
Thank you,
sure.
ma.
This is your duty. Whatever I am teaching right now, you should at least take some notes of whatever is being taught during the class.
Uh,
Okay? Yes,
Hello,
please.
Ma.
Yes,
So,
please.
Ma, if I don't know whether I'm getting it right. The basis for identifying trading and PL accounts is for one to
Hmm.
consider the expenses. If, for example, it must be required for the manufacturing to take place, then
Yes,
then it should fall under trading.
true.
But any expenses that is incurred after the manufacturing has been completed, then it should be part of
Yes,
PL.
yes,
Is that the
definitely.
basis?
Def-
All
So
right.
that is why trading expenses means the direct expenses. Your direct means which is linked with manufacturing, and direct linked with so indirect right means it's a part of trading. All
All
right.
right. Okay.
Yeah. So that way you can identify the entries. One conclude and to prepare the balance sheet because balance sheet is the last document which is compulsory for each and every organization to prepare in accounts. So balance sheet you need to prepare. Balance sheet cannot continue Government will not government is highly interested to know the financial figures of your business. It also declares that you have legal, valid business, you have done all the transactions legally, you paid the proper tax. So, for these purposes, you need to declare and data balance sheet. And you cannot directly prepare the balance sheet. In the you need to write all the detailed accounts what we have just learned. First, you need to journal the entry, you need to know which one is in the debit side, which one is in the credit side according to your. Then at the end of the financial year, you need to close down the books and prepare the. So you get the ledgers, then and you need to matching was the matching that the trading and preparing the profit will know profit or the loss of the business. And the business, then you can prepare the final document which is known as which balance sheet refers to the financial condition of the company. Balance sheet is a statement financial condition of the company. All right. So if to the formal definition, you'll get to know a balance sheet is a financial statement that shows the relationship between assets, liabilities, and shareholders' equity. Means the investment of shareholder in form of equity of a company at a certain point of time. Now, how why it is important? Because by measuring the company's net worth, the balance sheet shows the company's the picture of the financial. So you would get to know how much debt the company is acquiring and how much equity the company will have. So for that balance sheet, you need to prepare. And before preparing the balance sheet, you need to a few terms. All right. So here I am going to show you a specimen of balance sheet at the beginning. These are the items which will directly from the trial balance is going to appear in the balance sheet. We will learn how to prepare the balance sheet, but for now I would like to give you some info so that you can refer your study material and you are more clear while coming tomorrow in the. So balance sheet is divided into two parts. One is, as the heading suggested, it is the liabilities section, and the right hand section is the asset section. Okay, so asset means all the assets, whether it is a short term asset, whether it is a long term asset, whether it is a cash, whether the cash is deposited into or whether it is the material left in the business, these all can be converted into cash. It is your asset. So whatever the company is owning, those assets, whether it is tangible or intangible, it's a part of asset section. You can refer the examples. The vehicle, and these all are a part of assets. All right. So assets is nothing but whatever the company owing, the property of the company. All right, whether it is tangible or intangible. Whatever the company owing, those properties are assets. Only where the company do have the ownership. Now, the liability section. Liability section, you will find all the funds which is borrowed by the company. That means in a future date, the company has to pay back or return. Those are a part of liability. So whatever the money which is public money, the company has owned it as capital. So some of the other time they have to return it. So whatever you need to return is a part of liability. So you can see beginning it is written capital account. So capital is liability because the business in the business, if it is a company, the owners doesn't invest their own money. Rather they invest share or debenture. So when public invest it, it is a liability on you. You need to return it after a certain point of time. That is why capital is liability. But of course, it is a money which is invested in the business. With this capital, you can add if you have profit, you can minus if you have losses. Similarly, if you are drawing something that is known as drawings, you need to minus it. And if you have interest on drawings, you need to minus it. Rather than this, you have so many other examples like long-term loan, any bills to be payable, draft. These all are a part of your balance sheet. And if your balance sheet PL account as well as the balance sheet, I will the topics which are new for you. You refer my cursor. Here it is written outstanding expenses. Now, what does outstanding expenses means? The expenses has already occurred, but you have not paid. So, why it is a part of balance sheet? Let's say right now we are in the year 2020. Post fees. But as I am studying, I have already availed the facility of teaching. I need paid or not done. I have obligation to pay myself, and I have also attended the classes. So I have taken the facilities. It's known as outstanding expenses. Means the expenses which has occurred, but the organization hasn't yet, and the organization has liability to pay outstanding expenses. That is why it is in the liability side. Similarly, point in the liability side. Now, how this is can be liability asset. Saving the money in advance, it comes. It is your liability to keep it safely, and you month of is going on. Now, if in the month of May I have received the fees for month of June and July, that means it comes and no money, even it in advance. My responsibility or liability to use it once I thought, and then if anyone in advance, I have gotten or I have received the fees. So this is income received in advance. Similarly, in the right hand section, in the asset section, refer my cursor, prepaid expenses. Now, how this prepaid expenses is assets? Let's say your expenses has not occurred. You have not availed the facility, but before that you have paid. You have paid the amount which is due. Now it is become an asset because you are uh, deducting your liability before the time. So that is why prepaids always are in the asset side. And similarly, accrued income means the income which is not yet received, but the income is there. Let's say, for an example, when you deposit money in the bank generally gives you interest after every 3 months or 6 months. All right. So they deposit the interest in your account after every 3 months or after every 6 months. After 1 month, you have not earned anything. It will be so see, or you can tell income has already occurred, but I have not received. So it is a kind of accrued income. Means income is not yet received, but it is there. So it is your asset. It is going to come to you in that's the liability because you need to pay, you have already done something, the expenditure has already occurred. Similarly, if income received in advance, it is a liability because you need to hold the money for the time when it has to be actually received. Similarly, in the asset side, if there is prepaid expenses, means the expenses has not occurred before that you have paid, is going to be your asset. You have already paid the money before the liability occurs. And accrued income is the income which is occurred but you have not received. So these four terms you need to remember for preparation of balance sheet. And in view of your examination, there is going to be a compulsory question to prepare the balance sheet. Even in the assignment, you will definitely get a question to prepare the balance sheet. So tomorrow's class is going to be very, very important for all of you because tomorrow we are going to learn how to prepare the balance sheet. Okay. And doing this and and your so what are you sit with pen and whatever we have discussed, it's a part of your ICS to write block 2 to practice and also you solve question of trading and profit and loss. And in any case, if of the item is in the PL, you can ask me tomorrow. Unless and until you make the sessions interactive, you come prepare with your question, I really won't be able to help you. I can help you once you come prepared to ask questions. Because these 2 days you is from are going to be right. You come prepared so that am I correct?
Ma,
Yes,
what
ma'am.
is bank overdraft?
Yeah, yeah. Bank overdraft you know. Okay, fine. So bank overdraft, let's say I can give you one example for bank overdraft. Let's say I have 30,000 rupees in my bank. Okay. So if I have 30,000 in my bank account, how much maximum amount I can withdraw from bank?
I think you cannot withdraw more than the amount in your balance.
Whatever the balance I do have. So if I have 30,000, the maximum what I can do, I can close down my account and I can withdraw 30,000 rupees, right?
Yes, yes.
But at any cost, at any condition, I cannot withdraw 30,001 rupees. The bank is not going to allow me.
No, yes. Bank cannot
Yeah.
allow you.
Bank is not going to allow because that is not my money. But what is the bank overdraft facility? Suppose you are a loyal customer of bank, you are having an account in a bank for a longer time, and you are sharing a very good relationship with the bank. You can write an application to the bank that right now I need more than 30,000 rupees. Let's say I need 40,000 rupees. So what I can write to the bank that kindly allow me to withdraw 40 so that I can meet my obligation. So if bank allow you, that means another 10,000 bank is giving you a facility. So if you have 40,000, that means another 10,000 bank is giving you a facility, and bank is allowing you to take out just as a loan. And that is known as the overdraft facility. So if you are drawing a check of 40,000, bank is going to clear you after accepting the application. But when you are going to return those 10,000 rupees, bank will charge some interest on that. So bank provides service provided by customers. So if you don't have money or you need more money than you have deposited in the bank, you can apply for overdraft for some time. Generally, it is for 3 months only. Maximum period of overdraft is 3 months. So within a 3 months, the customer need to return the money to the bank with a interest. So with these circumstances, bank can provide you the money which is not available in your account. All right. So this is known as overdraft facility. So let's say you have drawn a check of 40,000 and you have applied for overdraft, it is going to clear. However, you don't have that much of money in the bank account. So this facility can be provided by all the banks to the loyal customer. With this, I have answered your question. Any other question? Any other question? All right. So if you all have no questions, then I wish you will go through your block 2 today and bring your queries tomorrow. So tomorrow we are going to learn how to prepare balance sheet, as well as we are going to study how to interpret the balance sheet. So that we are going to study tomorrow. All right. So for today,
Yes,
have a good day.
thank you very much, Ma.
Thank you. I hope you are liking these sessions.
Yes, Ma, it is very interesting. We are
Yeah.
understanding things that are difficult to understand now. You are making it very easier for us to understand.
Thank you so much. Thank you so much.
Much.
You can also write your queries. I am giving you my mail ID. In case if you have any doubt, you can personally write to me. I am giving you my mail ID. So if you have any queries, you can personally reach out to me in the mail ID. Yeah, I have given my mail ID. So if you have any query, you can personally reach out to me in the mail ID which is given. It is sushmita at xit.ac.in. Thank you. Have a good day. May I request all the participants to please log out? May I request the operator to switch off the recording? May I log out now? रिकॉर्डिंग खत्म कर सकते हैं, हम लोग बंद कर सकते हैं। या थैंक यू वेरी मच, बाय बाय।